Welcome back to the Broker Power Up podcast, the AIME podcast for strategy, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathan Haddad. How's it going?
Yes, sir. It is going fantastic. Got my fortune cookie on lock. You've had the last few, so I think it's time.
Yeah,
I'm prepared and have mine.
cool. Well, we have a lot going on today. We have the Broker Buzz, where we dive into the top posts of the week from the Brokers Are Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we're going to have the sales pitch training, where John helps us become better salespeople and learn the takeaway close, why removing options increases sales. And then we'll wrap things up with story time with John. But first, that fortune cookie. What is our
Yes,
fortune?
yes, sir. Here we go. All right. Today's fortune is very simple. Just kidding. It's not. An enjoyable vacation is awaiting you near the mountains.
Half right. I
Yeah.
have a vacation coming up, but it's not near the mountains.
So I'm trying to think if I have anything on my way. I don't know if I'm going to be near any mountains, to be upfront with you. Maybe a couple. It's not a vacation, though, but I got a couple things coming up in Dallas and in California. There are some mountains in California. However, this one may throw us off today, Tommy.
It may have just been like a delayed one because I did go hiking in Virginia and saw Shenandoah Valley, saw a bunch of mountains there. So maybe it was just like, hey, you were supposed to pick this fortune cookie a couple weeks ago. But
Yeah, maybe that's what it was. Maybe we screwed it up.
it's okay.
But however, the numbers, y'all, if you're interested, 11, 18, 21, 26, 33, 34. Or maybe it's telling us time we should that thing we're planning that we're doing with all of us. We should go near the mountains.
I'm not opposed.
Let's keep that on the back burner. I'm actually going to save this
Absolutely. Do it.
Because when we make it come true ourselves, we're going to come back and talk about it.
Absolutely.
All right.
Well, let's dive into the broker buzz with our first question this week. How do you help clients estimate monthly payment/closing costs? Do you do it manually on every home they see, or give them something that will allow them to themselves?
So we touched base briefly on this, and the question is framed a little differently this time around. And I talked about last time, just making sure it's accurate, making sure it's all this. I want to drive this point home even more. When someone says, do you do it manually or do you have them fill it out themselves? Look, if you're in a position to where you're just inundated with business and it's hard to get on the call and you don't have an LOA and you're pulling a, Todd Bitter, as we like to call it, where you're just, you got a system and you can do $100 million a year in business, fine. This might not be for you, and that's okay. But a lot of the community that I talk to, we're not in that position to where you're doing 20, 25 units a month. We're doing 2, 4, sometimes even 1 unit a month. If that's you, if you're doing less than 10 units a month, I don't see why you would not get on the phone. I just don't see it. It's not built inside of me to where you tell a consumer, like, yeah, just log into the portal and price out what you want from a payment perspective. Do you know how off that can be? And I get it. You have your financially savvy clients that understand it and they know the numbers and they understand how P&I works. Most of your clients are not that. Most of your clients are not engineers. Most of your clients are not accountants. Most of your clients are not people that are dealing with that on a day-to-day basis. So what I don't ever want to happen is, imagine, would you feel bad if you lost a deal because the client goes online to look and they look at your payments that you give them? One of the payments doesn't add up to what they want. They tell the real estate agent and their agent goes, here, just check out this other lender instead. He'll actually take your call and answer your questions right now. I'm not comfortable losing a deal that way. And somebody might say to me, well, John, what if I have something going on in my family and you're in commission sales? I am terribly sorry. I totally get like life and certain things. Trust me. I totally get it where you're like, no, screw this. I don't want to talk to you. That's different. I'm not talking about those one-offs that are families very specific. But everything else, to me, that's just part of what our job is, being in commission sales. There's a reason I choose to be in commission sales. And it's not because I want to work 40 hours a week and only take calls between this time and this time. So I want the client to call me back. I want to tell them the payment. Matter of fact, I said it last week and I'll say it again. I'm a stickler about it. Hey, anytime you look up a different home, it is very important you call me directly. The reason why is numbers can change. Taxes could be different on this home. I want to make sure you're getting as close to accurate as you can. Would you agree you'd rather have numbers go down than up? Yes, I would. Of course, me too. That's why calling me is important as opposed to you guessing what the payment or taxes might be. Is that a fair statement for me to make? Awesome. So, Tommy, I have your commitment that when you
Yeah.
go to look into a house, you'll make sure you get in front of me first. Don't even worry, Tommy. You're not going to be bothering me. If I don't call you back, trust me, I'll get in front of it very quickly. Even if it's the weekends, I'm there for you every step of the way. Does that work for you, Tommy?
Yeah. No, absolutely.
Perfect.
And
See the
when I was
difference?
going through that, yeah, I've only purchased one house,
Mhm.
but when I was doing that, when I feel like if I were to be like, all right, well, how much would it cost for this house? And they told me, here, go figure it out with a link. I would just be like, wait, isn't that your job?
That's exact.
Kind of a, yeah.
And y'all, let's not pretend that some of these loans, if you're the average margin right now, I believe, is right under 2%. This is industry wide. So basically, what that means, y'all, on a $300,000 loan, the income is $6,000. Now, I get it if you are, work for a broker shop and you have your splits or whatever. But again, it's still $6,000. I don't care how you slice or dice it, it's $6,000. So pick up the phone, make the call, have them call you, have them make adjustments. And again, if you're a broker I'm not going to sit here and tell you I didn't get to that place. I was doing, 60, 70, $80 million a year in business. Yeah, I get busy. It's hard to take every call, but then you bring in an LOA, you bring somebody else on. But the consumer not being able to have access to you is a problem, especially if they tell their real estate agent you're done. Good luck. Because think about it. Do you want them calling someone like me or someone else that can handle that? Where, yeah, I'll take the call. Sure, I'll call you on Saturday. Sure, I'll call you on Sunday. Sure, I'll call you 7 a.m. Monday morning. Sure, I'll call you 6 a.m. Monday morning. I will do that. I don't care. You want to call midnight? Great, no problem. I'll call you at midnight. I just spoke to a client in Japan. I had to wake up at 4:30 my time just because it was the only time he's in the military. So we had a call at 4:30 my time. Are you competing with that? Is that what you want to deal with? So just be prepared, accept it. It's part of your role. I know it gets frustrating. Sorry about hammering that home, Tommy, but it's
No,
something
makes
that's
a lot
been
of
on my
sense.
mind.
Absolutely. Absolutely. Next question. Why can't brokers figure out a way to do non-warrantable condos with some consistency like banks do? I just had to refer out my accountant's daughter to a local bank because they will do a brand new development with 5 to 10% down, and I can't find anyone to make an exception to do 15 down. It's only 9 units and 2 sold so far, and he expects to have all 9 under agreement in the next month. So they told my borrower to apply locally or risk losing your deposit.
Look, this happens. And when you say, when we say like why brokers, I understand your question. So let me start there because I can hear the frustration in the question, which is completely understandable. It's your accountant's daughter. It's like, this is my guy. This is an easy
Yeah.
one. Like,
Yeah.
there's no shopping involved. Why don't we have anything? So first and foremost, I totally understand that. Number two, yes, there are some things you can do, but the issue we run into as brokers is if we go to a lender, okay? So we go to this lender and we say, can you help us out with getting a better option for non-warrantable condos? So that's how we set it up. What the lenders can do is they can package a type of deal where they say, okay, the first $50 million that you bring in the door will give you something special when it comes to this. So in this instance here, what happens for mortgage brokers is, well, if we don't fill that $50 million up, the lender that's telling us we can do this, they're going to take a loss. Because if they go out to the market and to the investors and they say, I can deliver $50 million of non-warrantable condos, here's how long you'll hold it for, here's what you can flip it for, here's how much you'll make. The investor says, okay, but you got to make sure all $50 million is filled up. Lender says, yes. They give us the approval. It comes to mortgage brokers. We don't fill it up. We only give them 10 million of the 50 that they wanted. Do you know what happens to the other 40 million, Tommy?
I don't.
They have to pay it. The lender has to pay it.
Yeah,
So
that's
do
yeah.
you think, now let's be clear. All right. I have people that work for me. They get EPOs sometimes. It happens. Early payoffs happen. You know how hard it is to go get money from a mortgage broker? You know how hard that is? You want me to go? I'm gonna go to you. You're gonna cover my 40 million, the rest of the community. So I say that because one, that's why it's hard. It's hard to strike specific agreements when it comes to this directly. So that's number one. Number two, the local banks, if they have a relationship with a builder, they'll do one-off loans. It's their money. They're lending their money and they're saying this is what they'll do. And then in turn, these non-warrantable, especially if they're new construction, I will say this, there are some caveats and rules that make it to where you don't have to go non-warrantable. So learn those rules. It's Freddie Mac specifically, and see if there's opportunities for you to still keep it a conventional loan. But non-warrantable is a tough place. Not a lot of people want to do it. Not a lot of people want to hold the books. And if it's truly non-warrantable to where you can't get out of it easily, refinancing them is not easy either. And so there could be a potential loss involved, but there's a whole thing that goes into play. Do what's best for the consumer. It sounds like locally is best. Double check the guidelines when it comes to Freddie Mac. I wanted to give you an idea why brokers, it's hard to get on our side because it's hard to package these deals and really guarantee that we can drive in X amount of business to a specific lender because they're the ones going to be stuck with the bill. And I don't know about you, but if a lender comes to me and says, hey, you said you'd help with this, here's how much you owe us because it didn't work out. You're just, the likelihood you want to pay that is just super minimal. So it is a risk thing. I understand the frustration, but sometimes it happens. I have one of our brokers right now. I won't mention names. His own daughter, she got an unbelievable deal from the builder. He literally called the builder, vetted it out, made sure everything was legitimate. He told her to take the deal. His own daughter. He said, you have to do this. It was unbelievable what they did for her in terms of the rate buy down. And it just made way too much financial sense that he told his own daughter to take the deal. So sometimes it happens. And that's what I say about that.
Absolutely. Our final question for the week. Any advice when your CRM gets hacked or phished?
Number one, this is serious as can be. It's going to get way worse with how advanced technology is getting with AI and machine learning. So number one, you need to figure out and make sure that your CRM, is it on them because they didn't do a security update or somebody broke through and they didn't tell you? If it's the CRM, that's a big deal. And you got to make sure you're reaching out to them and figuring out what they're doing next. Matter of fact, if it is them, they need to tell everybody if they haven't already. So that's where I'll start. Number two, if it's you, you got to figure out why it happened immediately. Did somebody click on a link? Did you click on a link? What happened? Number three, there's a ton of security services out there that are cheap, that'll monitor your systems. I don't care if you're like, but I don't have, you got to find a way to make time to spend money on something like that. There's a lot of services out there that are much cheaper than they've ever been before. It is a really big deal that you stay in front of this. It's not going to slow down. It's not going to stop. And based off, if you're working for a shop, based off the shop you're working for, I would ask a lot of questions there as well. If you're working for somebody directly, not everybody's security is dialed in. We've had to make some major adjustments on my mortgage side of things simply because of the NerdWallet situation, but it's gotten even more and more intense. And we get people come at us even more and more now because of who we are underneath. That's a real thing. And as you scale, it's very important you stay in front of that directly. So that's a really big deal.
Absolutely. And kind of preventative tech question or tech advice that I have. When you're dealing with sensitive information like this on accounts, change your password regularly.
Oh my God.
Either 3 to 6 months every time. Don't change the 1 to a 2. Change the whole password. Make it strong. Use a lot of browsers now have password creators that will generate you one. Keep that, save it, use a password management system, and keep it safe to prevent any of that. Well, if you want your question answered on the podcast, be sure to become an AIME member. And if you are an AIME member, post in the Brokers Are Best Facebook group with hashtag #BrokerPowerUpQuestion, and we will make sure to get your question answered. If you are not an AIME member, please feel free to scan the QR code, check out all the incredible benefits on our new website, and get your questions answered in the group and get access to all the amazing benefits that come with it, including a few states. So if you're an annual member. So on the other end, we'll be back with some sales pitch training.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first. Couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com, AIME group.com/membership. Your community is waiting.
All right, and we're back. John, the takeaway close. Why does removing options increase sales?
So, Tommy, BCG, my friend, BCG. Be the curated guide. Our story today after the sales training has a lot to do with exactly this topic, the science, the psychology, everything. But BCG, be the curated guide, is really simple. Be present, curate, guide them. So that's the steps that you want to take whenever you're in sales to begin with. And here's what I mean. Are you ready? My wife one day, she wanted to paint the house. I'll start here. She wanted to paint the house, and she comes home from Home Depot. She has all these colors that she put in front of me. I'm talking like more than I ever wanted.
Oh, I've been there. I've been there.
You already know where I'm going with this, okay? Yep. So I just had a crazy day at work. I'm coming home. I'm looking at all these colors, and she's like, "Which one do you think is the best?" So I'm looking. I'm trying. I wanna. This is early in our relationship, so maybe a little more patience than I have today. So I
don't know. You pick.
So I'm trying to be dialed in. No, you can't say that. So I'm like, all right, let me be dialed in. So I'm like, babe, I like this color and this color. And she goes, I don't like any of those. So I'm looking at her like, well, why did you ask me? So I said, all right, hey, babe, listen, why don't you break it down to the 3 colors that you like? And from the 3, I'll tell you the ones that I think looks good. So my wife's kind of looking at me funny. She's like, all right, whatever. So she breaks it down to 3. And not only did it make my option easier, it made hers easier, where she picked the 3. She's like, okay, cool. This one, here's why. And she had a reasoning for all the 3 that she picked. But we really dialed in her choices, and it made it easier. And it made my life easier when it comes to making a decision. And think about your clients. The majority of the time, they have a significant other, a spouse that they're relaying the information to. Most of the time, you're not talking to both people every single step of the way. You're only talking to one person. So limiting the choices is very important. And there's people out there that'll say, well, John, what about the clients that want 15-year, 20-year, 30-year options? There's a way to BCG this client, to guide them, to curate the option. And it goes something like this. When a client comes in the door and says, I want an option on a 15 and a 30-year, let me get everything you can. I hear a lot of mortgage brokers say something like, yeah, let me just work through that with you. Instead, be present, curate the experience, and guide them. I do something like this. So, Tommy, I could show you 6 different loan structures. I can walk you through every single one of them. But based on what you told me as the expert, I'd narrow it down to 2. One maximizes savings. The other gives you flexibility. Between the 2 of those, which one do you believe is best for you and your family right now?
Maximizing savings.
Okay, so maximizing savings. So if we go with a 15-year fixed mortgage, we're on the same page that wouldn't maximize your savings. That would actually increase the amount that you pay on a monthly basis, because that's the only way to pay off a mortgage in 15 years. Does that make sense?
Yeah. Am I qualified for both?
And so you do qualify for both, but it sounds like right now the main thing for you is to maximize the savings to give you flexibility on a month-to-month basis for you and your family. Does that sound right?
Yeah. As long as I can afford it and it's in our budget.
And that's exactly why you work with someone like myself that loves to curate the experience for you. One of the things about me, Tommy, is I'm not the type of person that's going to tell you all the different options that you should go through, because the reality is it'll cause a lot of analysis on your end that could stop you from moving even in any direction for you and your family, because it's too overwhelming with all the numbers and the intricacies. Let's just keep it simple. Sounds like maximizing savings is the most important thing. Is that right?
Yeah, and
And
so it seems like by cutting things down, it's you're providing your value and saving me time by comprehending the things that I've already told you that I'm looking for, and you are then implementing it using your expertise to show a few options, like the 3 painkillers.
it is. And the other piece of it from a psychological standpoint, it's this. Look, all right, Tommy, when you're ready to buy a car, let's just say, when you're ready to buy any big decision, as somebody that's going into that, male or female, your mindset, you try to put yourself in a place where you're like, I'm not going to lose here. All right. I'm going to win this. I'm going to go in there. I'm going to be direct. I'm going to make sure I get what I want. I'm going to be the absolute most dominant accountant walking into this conversation. I'm going to be a CPA. I'm going to be an engineer. I'm going to be so dialed into the numbers. Is that a fair mindset that you think a lot of people put themselves in whenever they go to make a big business decision or a purchase?
Me personally, I'm usually nervous.
You're
I don't
nervous.
have that. I don't have that. I'm gonna get the best. I'm usually just, I don't know, second
A little
guessing myself.
cautious going
Yeah,
into it.
yeah,
So
yeah.
little cautious. That's okay too, as part of it. But so you have one or two people. You have somebody that's a little nervous, little hesitant, little cautious. I'm going to kind of play the cards right. I don't want to make a bad decision. Is that fair? And then you have the other side of it where it's like, I'm going in and now I'm gonna be a negotiator, even though my whole life I haven't been the best negotiator. So I say that because when you walk into the conversation for a mortgage, either one of those people, you don't want to get screwed over.
No.
So you're like, the 15 year, do I pay less interest or more? And so you start going down these paths, but the goals that you actually need, they might not correlate with where your head is at that time. So it's very important for us as a professional to understand that psychology. As Tommy just said, he's nervous, and then you have the other side. You've talked to both of these people, and these are the majority of clients that we get every single time. So understanding and knowing that means that you have to find a way to isolate the actual issue and separate it from where their brain is at that very moment. And so the BCG method allows you to curate this and have these conversations. I do stuff like this. And you can even make it more simple. So I do something, Tommy, I hear you. Let's just say the client won't let go and they really want to see the 20, the 15, the 25, and the 30. I get even more layman. I say, okay, Tommy, hey, at the end of each month, when you pay all your bills and all your bills go out, do you look at your bank account and go, wow, I have so much extra money left over, I could pay extra on my house? Or do you look at your account and go, gosh, I wish I had a little bit left. I wish I had a little bit extra left over so I can invest and save and put some money aside for me and my family. Which one of those people are you?
Invest to put away.
So you see how you open up that conversation and open up
Yeah.
the door, and you do it in a way that's not like, no, you can't afford it, you can't do it. I've had people where they don't do this. All right. Don't do it. You could be tactful with this, but I've had people where they get the client's bank statements and then they'll say something like, well, yeah, but you can't afford it based on your bank statements. You're now triggering something. And so instead, you want to be very cautious with how you word it. And you want to do something like, hey, just as someone that's been at this for X amount of time, X amount of years, I've seen X amount of mortgages. And for those that are new, even if you've seen 10 mortgages, that's 10 more than the person you're talking to. I promise you've also taken the test. Be confident in how you say this. It's based on what I'm seeing right now. We might have to get a little bit more disciplined in our spending when it comes to a 15 year. Are you open to my suggestions on this?
Yeah,
And
yeah, as long as it fits in our budget.
you see how I frame it that way? And then I walk through. So, Tommy, for me, just one of the things I look at is bank statements. And as I'm going through yours, what I'm seeing is not too much additional left over. You see how my tone is shifting completely?
Mhm.
I'm still delivering the news, but I'm asking for permission. Is it okay for me to go down this path? So, for those out there listening, the BCG method, curate, be curious up front, understand, listen, but don't sit there and be an order taker. I'm begging you. You get paid too much. You get paid too much. You help too many people. You are the pivotal part in such a perfect, beautiful process for these consumers. You're either helping them refinance or you're helping them buy a home and live the American dream. So take that very seriously and don't be an order taker. BCG your way through the end and do not just give 6, 7, 8 options. Your client will not know what to do with it. I'm telling you right now. You don't just either want a 15 or a 30 year. It doesn't work that way. It doesn't work that way. And if they're refinancing, and last thing I'll tell you is this, if they're refinancing and they say to you, I want to pay my home off faster, here's the best question you can ever ask that will stop people dead in their tracks and will tell you 15-year makes sense. So, Tom, are you ready? Go ahead, ask me. I'd like to also look into a 15-year mortgage. I'm currently at a 30. Go for it.
I'm at a 30-year mortgage. I'd like to look at a 15 to pay it off quicker.
I love where your head is at. And Tommy, just so I can get on the same page with you, what have you done over the last 3 years of owning this mortgage to help pay your house off faster?
I paid an
There you
escrow
You see,
thing.
you see what I mean?
Yeah.
That question's so vital because if the client says, "I've never paid extra on my house, I've never made an extra payment, I've never tried to apply towards principal balance, I've never," why on earth am I going to go price out a 15-year when you've never paid extra one time? But that question stops people dead in their tracks, and that it allows me to take control of the conversation again. Hey, Tommy, rest assured, I simply was asking that question just so I can understand if you've already paid extra, if you've already tried to pay this off in 15 years, if you've already gone down that path. Sounds like you haven't just yet. Let's work on a game plan together. Why is the 15-year mortgage so important for you? What's happening in the next 15 years that's wanting you to take a look at paying this off in 15 years? Do you see what we're doing now?
Yeah. Yeah. Yeah.
And
Yeah.
because now I know it's tied to something. So if you say I haven't done anything, but now you want to pay it off in 15, yo, I can't tell you, I don't mean to say it this way. I can't tell you how many times I've been right about this assumption. So when I say that and I reframe it and say, so what's popped up? Man, actually, now that you say that, here's what happened. Retirement's around the corner, and I now have to start thinking about it. I'm 50 years old, and 65 is when I want to pay off this home. I don't want to be 70, 75 years old paying this home. Oh my gosh. Okay. So it sounds like, and now I'm going down that path. If you've spent 20 years owning a house and you've refinanced it, you've purchased a new one, and you've never done a 15-year mortgage, but now you're saying that to me, y'all, something is up. So the first part of BCG is be curious. Ask the question and you watch it happen live right here because what Tommy's face did, I'm assuming is what every client I ask that question to does when they tell me they've never paid extra on their house, but now all of a sudden they want a 15-year mortgage. So I hope that helps.
Yeah, and it shows it you're asking for behavioral changes, right? To see if that's actually what they're wanting to do.
Yes,
But
sir.
so what if the answer was like I want to retire early and I don't want to have my mortgage. I haven't done this yet because I don't think it makes sense to invest or to pay more on my mortgage unless I switch to a 15.
That's a different type of client.
That's
Perfect.
yeah.
So it
Yeah.
sounds like, Tommy, you've been investing in other areas that have been giving you more income when it comes to your return. Is that a fair statement to make?
Yes, yes.
Awesome. So you sound pretty financially savvy when it comes to your money and making sure that it works the best for you. Is that a fair statement for me to make?
Yep, that's what I'm looking to do.
Beautiful. I'm going to go ahead and take a look at no problem. Now it's, yeah, great. 15-year, 20 might make sense for this client. That's kind of the whole point of it is have you like what's your thought? Are you living
Yeah.
paycheck to paycheck? Now you want a 15 because retirement's around the corner? Now, look, I'm not saying I don't love where your head is at. I do. I'm not saying I don't admire, but now I got to be realistic with you. Hey, you haven't done this for the last 20 years.
Yeah.
You're living paycheck to paycheck, moving into fixed income. I understand the urgency of paying this off, but why don't we set you up on a 30-year to where we set you up to pay extra or a 20-year that might make more sense? But to your point, it opens up the door to let me know the kind of consumer I'm talking to. Is this impulse or is this strategized? Do you know how to do it? I've had clients tell me before, actually, once a year, I make an extra $3,000 payment. I've been doing that now for about 5 years. I've now paid an extra $15,000 in principal over the last 5 years. I think I'm ready for the next phase. I do too. Yeah,
Yeah.
that sounds like you're ready for the next phase. You've taken steps to get yourself in that position. So that's where my head is at. That's how I explain it. BCG.
All right. Well, if you're ready for the next phase, you can scan the QR code in the ad and get your Fuse ticket. If you are an AIM member, claim it. If you are not, you can become one and then get one at a discount instead of paying full price. So scan the QR code and we'll see you on the other end for story time.
Fuse is just around the corner, believe it or not, another year down. And we are excited for the largest event of the entire wholesale mortgage industry. Fuse National Conference 2025 is taking its show on the road. Now emanating from Nashville, Tennessee, from October 23rd through the 25th. This event is all about sales, sales, sales. Don't miss the chance to join us in Music City for 3 days full of the most cutting-edge content we've ever produced, featuring the industry's top minds, leaders, and innovators. Access the newest tools and resources from wholesale leading lenders and vendors. Take part in our acclaimed workshop summits for free. Catch wholesale's rising stars in their very own breakout sessions. And of course, take part in the best and, quite frankly, the most fun networking opportunities you'll find in the wholesale channel. Join us to grow your network, your skill set, and your business at what will no doubt be the greatest Fuse conference yet. Go to fuse.aimgroup.com to sign up and receive updates when tickets go on sale. Secure your hotel room and get your Fuse tickets for free. That's a $600 value for the prices as low as $199 when you sign up for an AIME annual membership. Don't miss your chance to be there when wholesale history is made at Fuse 2025. I can't wait to see you there.
All right, and we're back. John, the floor is yours for story time.
Yes, sir. All right, y'all. I am going to hammer this point home of BCG. Be present. Listen deeply to the consumer, and make sure you listen to what they're saying. Read in between the lines every single time with a client. There's a lot of times where you have to read in between the lines. The C, curate the experience. Eliminate the noise, eliminate as much friction as you can to make the decision-making process easier for your client. And number 3, the G, is guide them, lead them with confidence, not confusion. All these different options, all these things can lead to a lot of confusion. The amount of times I've had consumers call me, can you walk me back through those numbers? These are mistakes I've made. So when I'm talking to you about this, it's not like I haven't ran into these issues before. These are mistakes I have made as a sales professional over and over again. And then I just learned that this is not the way forward because I am not an order taker. So I want to tell you a story with psychology, with science, on how these two psychologists changed the way sales happen. Now, this happened in the year 2000. So not very long ago, believe it or not, which is crazy to think that the year 2000, now I know, Tommy, you're behind the scenes, but it seems like it was so far away. So this is a real study that was done by 2 psychologists in the state of California. So the psychologists were Sheena and Mark, and they ran an experiment that changed the way we understand sales across the board. Matter of fact, many companies have adopted this specific situation and applied it to their business model. So this is the story of this high-end grocery shop that was ready to launch some jam products. So they had this jam that they wanted to sell, and they wanted to really blow it up, and they reached out to these psychologists and just understanding the experiment, how things work. They wanted to figure out, can these people help us sell this product at a much higher clip than we could by ourselves? So this high-end grocery store reaches out. These 2 psychologists say, okay, we're going to run an A/B test to figure out what's going on and see if we can find a way to make your sales increase on this new jam product. So one Saturday, they set up a booth offering free jam samples, and they ran an A/B test. And would you believe that throughout the day in this A/B test, they had 2 different outcomes? Display A, the first one that they did throughout the day, had 24 different flavors applied to it. 24 different flavors. Now, with the 24 different flavors, you had so many people walking by, all of them trying these samples. Matter of fact, 60% of the people that were walking by from a foot traffic perspective actually stopped to try a sample. Of the 60% that stopped by with the 24 samples that were laid out, so they walk up to the table and they see every sample of jam that you could imagine. Oh my gosh. I don't know about you. I love some jam on my toast. I'd have been one of those clients stopping at that booth, trying every bit or until they kick me out and tell me to go to the next one because I tried too many. But so many people stopped by, 60%. That means 100 people were there. 60 people chose to stop by and try this. Now, of the 60% that stopped, only 3% of the consumers actually bought. And here's where things get fun. They also had display B. And display B was the same store, it was the same jam. The only difference this time was they only displayed 6 flavors of jam. And they said, here are our best 6 flavors of jam that we have. Now, from a foot traffic perspective, of the same 100 people, only 40% stopped by the booth. So for a lot of people on the outside looking in, they might say that's less people looking at my product, John. Why is this a good thing? Why is this a good thing? Because when you eliminate the noise and you eliminate the friction, what the data indicates is of these 40% of people that stop by, 30% bought. 30% bought. But there was only 6 flavors compared to the 24. Why would that happen? People had more options. People probably got flavors that they loved to try. 20 more people out of 100 stopped by. But only 3% of those original 24 samples that were out, only 3% of those people that stopped by actually bought. Yet we find that when we minimized the options and we moved it to 6 options of jam, of the 40% of clients that stopped by, 30% of them actually bought. When we give people too many options, you set yourself up for failure. There's something called analysis paralysis. This is a real psychological phenomenon. Too many options, people sometimes freeze. I don't even know what flavor to get. I don't have time. My brain can't figure it out. I'm just going to move on. Right now is not the time. I have other things in my life going on because it starts to get too complicated. Our brains don't like to be complicated. Our brains like to move forward and move fast and move quickly. But when you learn to curate your sale, and you learn to be present and to listen deeply, and then to curate exactly what is needed and what the clients are saying, then you guide them with confidence and you make the noise so much smaller for them. You make it easier for them to make a decision. But you got to build the sale up. You got to ask the questions. Check out this study. It is a really fascinating one. And ask yourself, how does this apply to my business today? Are you an order taker showing too many options? Or are you the guide that your consumers need and that your real estate agents need so that your clients can make the decisions with certainty with your help along the way? That is my story for the day. I appreciate you all. Until next time.
Awesome. Yeah, it's almost like what was it? McDonald's did the same thing where for a while they just went to burgers and fries because that was what was mainly selling.
Yes.
And it's funny, I went to our local grocery store and there was a iced coffee thing and there were 4 options. And I still thought that was too many options. So I just asked I and it was free samples. It was like a can of the iced coffee, and there were 4 options, and I was like, I looked at the woman running the booth, and I was just like, "What's your favorite?" And I just picked that one. So it's even, and then that right there is guidance, right? And
It
she was like,
is.
"I like this one. I like this one, but it's a little too sweet to drink too much, and so I prefer this one if I'm going to drink the whole can, kind of thing."
But
And
even that confidence, what does it do for you? It gives you, and I didn't say the numbers, I forgot, but yeah, just to give you an idea of that story real quick, Tommy. So 100 people, 60% of the people go to the first booth, 3% bought. 3% are only 2 people that bought of that
yeah,
60. The second display had 6 options, had 40 people show up. And of those 40, 30% bought. That's 12 people that bought. That's a 6x. You have 20% less people, but you have a 6x in terms of what you're selling. So to your point, the over analysis, even for coffee, made it too complicated for you. Like you're just like, all right, hold on.
yeah.
I was hoping I had maybe 2 options to pick from. Now, what do you expect? And you trusted that person. You allowed them to guide you down that path. They worked there. You just assume that, hey, they'll guide me in the right direction. So I'm not overcomplicating things when it comes to picking my coffee.
Absolutely, absolutely. I don't know. I just think it's people make so many decisions throughout the day that on the ones that now when you're buying a home, the loan really matters, and that's a big decision that you're making. But you have to think about all the small decisions that people are making, like what do they put in their coffee in the morning? So most people already know, right? They default that. It's like I drink black coffee personally. And so I don't ever have to make the decision, what am I putting in my coffee in the morning? And so it's just deleting those
It-
decisions that you have to make so that you can save your energy for the bigger decisions.
It's the Steve Jobs thing, right? I'm gonna wear a
Yep.
black shirt. And
Yep.
he talks about that. Like
Yeah.
it's a real thing. And
Oh, I've adopted it in so many ways.
it works though. It's
Yeah.
real. Like it's funny. People are same thing on my side. You know, people are because I love certain hoodies. I like they're like you always heard. I'm like it's just an easier thing for me going down
Yeah.
that path. So it's just part of it.
Absolutely. Absolutely. Well, thank you for tuning into this week's episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, and which helps even more people see this content. And ring the bell and subscribe so you get notified every time we drop new content. And then share this video with a fellow broker who could use a power up. Remember, lead by example, lift each other up, grow together, and most importantly, close more loans. Until next time, keep powering up.